Welcome to Let's Talk Property, an informal podcast show all about the UK property and mortgage market. I'm Nizam, and joining me is my co-host Lee. Whether you're a seasoned property investor or just starting to think about buying your first home, this podcast is for you. We'll be discussing a range of topics, including the latest market trends, tips for finding the perfect property, and how to secure the best mortgage deal. So join us as we explore the world of property and help you make informed decisions about your next property purchase. So this morning we are talking about the mortgage charter. And we're going to explain it. We're going to break it down a little bit and help you understand what it is, who it's for, and what some of the details in there are as well. So before we do that, Lee, how you doing?
I'm really well, thank you. I'm really well. I think, enjoying the sunshine.
Good, aren't we all?
How about you?
Yeah, not too bad. I just not long come back from a weekend away, and you know what it's like. You've got a short week, and then you're getting you're trying to squeeze about 3 days of work or 5 days of work into about 3 or 4 days. So feeling the squeeze, let's say.
Yeah. Busy.
But other than that, I'm all good. Booking the next holiday soon. I won't learn.
You need a holiday for a holiday, don't you? So you kind of have your days off, and then you've got to cram so much in that short space of time, and then you need another holiday because you've crammed so much.
Yeah. I would say it's a vicious cycle, but it's quite a nice cycle actually.
Yeah.
Cool. Well, let's jump straight in. So the mortgage charter. So as mortgage advisors, our job is to have an understanding of what that is, but obviously we haven't really sat and explored it in detail. And also, as an advisor, you tend to kind of build on your knowledge from the questions you get asked as well from your clients. And I think one thing that came up in a conversation not too long ago that we were having is I think someone asked us actually in I think it was in the media or something around, have we had many calls from clients asking about the mortgage charter, and how many people are looking to take up the offer of the mortgage charter? And our answer was actually almost nil. We've had almost no calls or conversations triggered by clients anyway about what the mortgage charter is and whether it's something they can that's going to be right for them.
Yeah, I think how many people actually know about it? It'd be interesting to know when people listen to podcasts, or see the title of the podcast, actually know what it is. Like you say, I think it was kind of mentioned way back a few months ago and kind of maybe brought to attention, but then it's kind of nothing's really sort of followed suit.
Yeah.
And people, I don't know, but it doesn't seem like many people are using it. So I guess we'll probably find out what it actually means when you talk about it now.
Yeah, and it could be one of two things. It could be exactly that. It could be that people just aren't aware of it. I think, like I said, it came in the news, and then all of a sudden there was all these articles about the mortgage charter one morning, and then they disappeared because something else probably took over in that news cycle. Or it could be that actually some people do understand it, and then but the support in there isn't quite right for them, therefore they haven't pursued it. So what I'll do, I'll kind of introduce it. I'm not going to go into lots of detail around it because it's available for anyone to see on the government website. To be honest, it's not a very lengthy document, but it's quite wordy, as you'd expect. So I'm just going to explain what it is first. So the mortgage charter was introduced in response to interest rates increasing quite sharply over the last 12 months. It followed some meetings from the Chancellor with some of the top banks. I think there were meetings in December and then a meeting in June, and the aim was to find a kind of solution that supported existing mortgage borrowers with their mortgage payments increasing, helping them to adjust to higher monthly payments, and also providing them with some support there, and trying to get some sign off or buy-in from some of the banks and building societies as well as to what they're willing to commit to. So let's dive in. So that's what it is. That's what it was introduced for. This came in around June or July, so it's been around for a little while. But the reason I wanted to do a podcast Sorry.
Yeah, sorry, Nisa. I was going to say something. Martin Lewis had some influence in as well, didn't he? I think he was kind of trying to get the banks to agree some sort of support or something. So yeah, I think he
I
had
think
some
so.
influence
Yeah.
on it. So I hear anyway.
Yeah, I
But
know.
yeah.
He was putting a lot of pressure on them. I think as were a lot of advisors as well, and you know, yeah, to do something. But yeah, no, let's dive in. I think the first thing I will do is just look at what all lenders have agreed to. So I say all lenders. There's a list of all of the lenders that have signed up to it. You'll notice that most of the big banks on the high street and the building societies, and also lots of regional sort of smaller building societies, have committed to this. So all of those lenders anyway that have committed to it have agreed that anyone worried about their mortgage repayments can contact their lender for help and guidance without impacting on your credit file. You know, that is not new in terms of if you are struggling with your mortgage payments, contact your bank. That's the best thing to do. I think a lot of people shy away from it because they think, oh, it's going to reflect badly on me. But actually, the lenders that have committed to this have committed to you being able to have that conversation with you and without the worry of it affecting your credit score. So, you know, anyone that is in that situation, the best thing for you to do is to contact your bank and have a look and make sure they've signed up to this pledge as well, the mortgage charter. And, you know, you can be rest assured, sort of put at ease that any conversation you have around that is not going to affect your credit score. Support for customers who are up to date with payments to switch to a new mortgage deal at the end of their existing fixed rate deal without another affordability check. Now, almost every lender, I think I can only think of one that wouldn't, off the top of my head, would allow you to do that anyway. So I think, again, in terms of how that works, if you're on a 2-year fixed rate deal and you're coming to the end of your 2-year fixed rate, allowing you to switch and lock in another deal so that you don't go onto the standard variable rate, which is a much higher interest rate. Lenders will generally offer you another deal, another 2-year deal, 3-year, 5-year fixed rate, or whatever it is. Now, if your circumstances have changed in that first 2 years, if they had to reassess affordability, there's a chance that they would decline you on the new deal, and you would be what's called a mortgage prisoner. You wouldn't be able to switch to another lender because no other lender would lend you what you currently need. And also you can't lock in a new deal with your current lender because they're saying it's not affordable, but they're still happy for you to pay a much higher interest rate on the standard variable rate. So you would, to avoid that kind of mortgage prisoner scenario there, most lenders already do this, but this is saying every lender on this list will not reassess affordability. So even if your income halves, they will still allow you to switch into a new deal, even if they wouldn't lend to you as a new customer, if that makes sense.
Okay, so it's a bit like when you could do a new application and you don't have to, effectively it's not income assessed, is it? You're not assessing based on your income level or your outgoings. It's just they can offer you a new rate regardless of your financial situation. Is that right? And credit score. Yeah,
absolutely. And I believe the only thing that actually you do have to do is make sure your mortgage payments are up to date. So I'm pretty sure if you're in arrears, they won't offer you that, or that I think there's a caveat in this to say if you're in arrears with your payments, then you're probably sort of horse is already bolted, so you're probably a bit late. But the next thing is going on to this, support for customers who are up to date with payments. I've done that one. There we go. I repeat myself. Lenders will provide well-timed information to help customers plan ahead should their current rate be due to end. So they haven't actually tied them into how early lenders need to contact you to tell you your rate's coming to an end. These are your options. Now, generally, lenders will do that 6 months before. So if your fixed rate is due to end in 6 months' time from now, then most lenders will now start to write to you or contact you and say, look, your rate's coming to an end. If you don't do anything, you're going to go onto this interest rate. Therefore, these are your options. Now, not all lenders did that 6 months before, and they're not committing anyone to do it 6 months before. That is what we've seen in the market, is more and more lenders contacting their clients earlier. It just says that they will provide well-timed information to help you plan ahead. And then the last thing here really is lenders will offer tailored support. So I think that's the key word, is it's tailored support. So they'll understand what your situation is, and try and come up with a solution that works for you. And that's for anyone struggling with maintaining their mortgage payments. And it brings us on actually to the kind of key bits of this, the two kind of headline grabbers, which is these lenders are allowing you, if you want to switch to interest only on your mortgage for a period of 6 months. Now, what that means is your mortgage payments will drop. If you're on a capital repayment mortgage, you're not reducing the debt for that 6 months. So your mortgage balance remains the same for that 6 months. All you're paying is the interest portion of your monthly payments, which is likely to be lower, quite a bit lower. So the idea, I think, there is to allow those people to regain their financial control for those 6 months, maybe use those surplus funds to save, and start preparing a bit of an emergency buffer for when the mortgage payments go up. Now, really, really important to point out, your mortgage debt will not reduce during that 6 months. So it means either you're adding 6 months onto your mortgage term, so it's going to take you 6 months longer to pay off your mortgage, or your mortgage payments will then increase higher than where they were before you entered into that 6 month interest only period, to make sure, because actually you've now got 6 months less to pay that debt off. Therefore, your monthly payments need to be slightly higher to make sure you still end your mortgage deal without a mortgage debt at the end of the term. So that's one of the options there. The idea is that after that 6 months, you will then go back onto a capital repayment mortgage. The other option there as well is they will allow you to extend your mortgage term to reduce your monthly payments and give you the option to revert to your original term within 6 months by contacting your lender. So if you initially took out a mortgage that was 35 years, 10 years ago, then actually that lender is saying, okay, well, we'll allow you to, for a period of time, again, for 6 months, potentially, extend your mortgage term back out from 25 years, which is what your current term is, back out to 35 years again. Again, the benefit of that is it will reduce your monthly payments because you're stretching that mortgage term out again. So it's going to take you longer to pay the mortgage off. You're going to pay more interest, which is the big one, quite a lot more interest by doing that. So although it'll reduce your monthly payments, you do really need to weigh up whether that's going to be enough of a benefit to for the cost, which is effectively more interest and a mortgage for an extra 10 years. Now, what they have said in there is if you then wanted to revert back to your term of 25 years, you can then do that within that 6 month window by contacting your lender. So the other caveat there as well is lenders still have their lending criteria. So what they won't do is, if you are already maxing out your mortgage term to the maximum age that that lender will take you to, and you want to extend your term, they won't allow you to. So they still enforce that age criteria. You know, it's not to say you're guaranteed a 40-year mortgage or a 35-year mortgage term, regardless of your age. It still has to be within their policy. So, you know, a lot of the clients I've spoken to that I've helped previously, it's not made a huge difference because they're already on the longer terms already after buying the first home. Might be able to increase their term by 3 or 4 years, maybe slightly longer, but actually it's not making a massive dent on monthly payments. So they're the two big benefits that everyone's talking about. They're the two that you can call your lender up and say, I'm interested in the interest only for 6 months or extending my term. Can you talk me through both options? But I wanted to just kind of introduce them and also explain that actually there is a cost to them. All right, they're saying they'll do them without us reassessing, but interest only, like I said, it's going to cost you more. It's going to push your mortgage term back 6 months, or it's going to cost you more monthly. And then the second one again is extending your term. Again, you're going to be paying more interest on your mortgage borrowing. So again, make sure that, you know, if you're having these conversations, you've probably already looked at, can I pull anything, you know, can I draw any money from anywhere else, or can I reduce any other outgoings to make sure I'm prioritizing my mortgage? But it will cost you more long term by doing that.
Yeah, I think the feeling I'm getting from you, particularly those last two ones with the support, is take it if you only take it if you really need it. It's kind of there to help you. If your bubble's about to burst and you can't cut costs anywhere, or you're really struggling, it sounds like that is something that can relieve that pressure for 6 months or however long. It sounds like otherwise, if you don't necessarily need it, it doesn't sound cost effective, or maybe even if you're thinking of maybe just reducing your payments for 6 months just to, I don't know, just to spend it on something else, then it's probably not worth it, is my understanding. So it sounds like it's designed for homeowners and people who already hold a mortgage that are really really feeling the squeeze, which a lot of people are, but it's probably really at a point where they cannot see kind of over the hill, as it were. So that's really good. I think it's good to know, and good to know that there is support available, because I don't think many people know that, which is really good.
No,
really good.
I completely agree with you there. I think you're absolutely spot on from my view as well, is use it if you need to use it. That is what it's there for. I think a lot of people were hoping to get a bit more in terms of support from the government and the Chancellor. I understand why they haven't, because that is also a slippery slope. If you start paying towards mortgage payments, then how do you then work out who gets that and who doesn't, and also how long you continue to do that for, especially if interest rates aren't expected to come down. There's going to be a point of time where actually this is what it is, and it's a horrible thought, but actually if you've been on a 1% interest rate or a 1.5% interest rate and you're already feeling the squeeze, then going on to a mortgage interest rate of 5.5% is going to make a huge difference in your monthly outgoings, even if you haven't got a big mortgage. So there, it's an olive branch, but it's not necessarily costing the government anything, which is, I assume, why they've done it. But it is something that wasn't there before. So it is something that I guess it's really clear that they're also both temporary measures. They're both temporary sort of support in terms of 6 months. Just 6 months is great, but actually, what you're going to do after that 6 months? Are you going to 6 months could give you enough time to sell your house, but then again, then where are you left? What would you do from then on? So I think anyone, as always, if anyone is struggling on that side, always speak with an advisor, speak with your bank, and just understand your options and make sure you're not missing out on anything, but also you're not making rushed decisions which you might then later regret down the road.
No, really, really good. And I think a lot of people, particularly obviously homeowners, will find this really, really helpful with this podcast and understanding that it's available. Because as you say, I think I did see it once or twice advertised many months ago, and it kind of just it fell down the wayside. No one really spoke about it, and we work in the industry, and I don't think we get any clients really. I think it's probably been one or two that might have mentioned it, but I don't think I know anyone that's actually taken advantage of it. So
no, nor do I.
I think I'm glad we're spreading the news.
Yeah, absolutely, and that's what we're here for, isn't it? So excellent. All right, well, great. Look, I think that's probably enough on the mortgage charter. If you are interested in reading what it is, it's about, how many pages is it? It's 13 pages, but I think about 3 of them are title pages, blank pages. So if you're interested in what it is and you want to read more, just Google it. It's on the government website. And also, if you are wanting to know if your current mortgage lender is signed up to the mortgage charter, call them and ask them. Or actually, most lenders have actually got it on their website. So you can Google, HSBC mortgage charter, TSB mortgage charter, Barclays mortgage charter, and it'll take you most likely to their page which says we're signed up to it. But it's also in the guide, like I said, as well, with the government website. There's a list of all of the lenders, building societies and banks that are signed up to it. And actually that represents, it says at the bottom, it represents 90% of the mortgage market, and there may have even been more that have signed up to it since then. So yeah, okay, great stuff. I'll leave it to you to wrap up then, Lee.
Great podcast. Well, thank you everyone for joining us for this episode of Let's Talk Property. We hope you found the discussion on the UK property market informative and helpful. If you have any questions or topics you'd like us to cover in future episodes, feel free to send us a message. Don't forget to subscribe to the show and follow us on social media for updates on future episodes. Until next time, we'll see you
in the property market.